Good day and welcome to this wonderful webinar from Golden Key Southern Africa, Finance 101 with Rudi Bouwer. Welcome today. Please would you put your name and your surname in the chat function and explain to us where you are logging in from. We welcome you to this webinar this morning, Financial Planning 101 with Rudi Bouwer. As we are letting the attendees log in, please would you mind to put your name and surname in the chat function so we can welcome you. I see we have Natasha Maharaj from Centurion, Gillian Kluter from Pretoria, Nikki Afonso, welcome Nikki, welcome Silouan. We've got CJ Hutton, Faraz Kemaldeen from Pretoria, Mpogwa Babe, I hope I said that right, Abigail Bowman, now it's streaming in, welcome everyone. Ceciline Tung, Maziko, Tembeka Shiba, Petra Apollos from Stellenbosch. Good representation here today at our webinar, Financial Planning 101 with Rudi Bouwer. Rufaro Moyo from Cape Town. Welcome to Borge Podile from Pretoria. Rosalia Sinvula from Windhoek, Namibia. Wow, welcome. Zante Ru from Joburg. And we've even got Oka Rabile, I hope I said it correctly, from Mafikeng. Welcome, Durban. I see Inge James from Potch. Good representation here this morning. Treasure Kambamba from Joburg, welcome. And as we now enter the session, let me introduce to you our speaker for the day, Rudi Bouwer. Rudi is a professionally qualified and experienced financial advisor and entrepreneur who focuses on lifestyle financial planning and coaching. He has extensively studied the relationship between money, psychology, and how that affects one's financial planning industry, and is passionate about financial education and the difference it could make to one's lifestyle. We hand over to you, Rudi. Thank you.
Thank you, Janita. As always, it's such an honor and such a pleasure to address such an esteemed group of people. My relationship with Golden Key has really just grown into something that was initially a task, and now it's become an absolute passion. So yeah, engaging with you guys is truly an honor, and it's been so truly enlightening, just the way that the response that I've received from this membership. And I must say, it really just makes me excited to be a part of a generation of younger people that have so much interest in how to steward their finances. I think it's something that is such a miss in our daily education, in the education systems globally, not only in South Africa, but definitely globally. So, for me, this is a passion to share something that I've become very accustomed to. It's my passion to serve my clients in this way, and just giving you this knowledge truly fulfills a purpose of mine. So yeah, I don't know if has there been any of you that have attended any of my previous webinars? Maybe just give us a little thumbs up there if you have. If you haven't, also just give us a thumbs down, just so that we can see that if we have some people that have attended some of the previous webinars. And yeah, it would be awesome to engage with you guys. I'd like to, just at the end, give you the opportunity. Also, I'm going to be giving you a free budget template. So those of you that haven't done that before, there's a way for you to just engage with me on that level, and then also open it up that you are welcome to engage with me on LinkedIn if there's any questions that you need to ask. There's so many of you that have. And I do try my best to get to everybody. So yeah, without further ado, I can see that there's many that have and some that haven't as well. So let's start the webinar. That'd be great. So yeah, Financial Planning 101. I think we've this conversation that I'm going to have with you now is basically just the very crux of the process that I take new clients through. just for the pure sake of understanding what is out there. So, if there, a lot of the previous webinars that we've gone through, I've spent a lot of time helping you understand what the psychology of money is, why you make certain decisions, not just focusing on the very mundane products, or giving you very straightforward advice on what to do with your money, but also how you respond as a human towards money, and what that looks like to you as you move into your professional careers, which all of you and most of you are going to be doing within the coming years. So for today's session, really, it's just going to be, if you look at the blueprint that I have put on here for you, this is basically the very basic starting point on how a financial plan would look like and how we would structure that for a client. So I represent a company called The Wealth Room, and basically what we would do is we would start a conversation about your legacy, your budget, healthcare and closing the gap, protection, peace of mind, rainy days, retirement, your kids' future, collective investments, local and offshore investments, and then foreign investments. So basically, the starting point for any financial plan, funnily enough, even though you guys are, wouldn't think that that's something that you need to look at yet, is a will and testament. Your legacy is basically everything that you are planning to and already have accumulated in your life. But there's different advantages to having a will in place. The big thing about having a will at this point is that your estate, if you die without a will in South Africa, your wealth is then kind of, your estate will be wound up without an executor, meaning that it could take up to months or even years in some cases. So, you guys, some of you probably don't have any assets yet, or, you don't really have an income yet. But at the end of the day, it is still very important for you, because if you even if you have a debt, it's important for you to put together a will. And this usually is, it's free to do. It's just, you can do it through any bank. You can do it through a financial planner like myself. You can, you can find a lawyer that will do it for you. Don't ask a lawyer, because they don't do anything for free. But yeah, definitely, it's definitely worth your while to look into that. The reason for that is it's, as you can see on the screen, I don't know if you've started reading there, but it does limit family disputes. It controls how your wealth is allocated, especially as you, as your wealth grows. You have to make sure that your wealth is protected. It's very important that you have the outline powers of an executor, because this person will oversee and manage the distribution of your estate, and designating a trustworthy and impartial executor provides you peace of mind that the terms of your will be honored. And I see it so often, that if in the event of death, it's such a stressful time for a family, and having to deal with final wishes and arranging funerals, and which distribution of wealth goes where. It's very important, even if you guys are asking, even if you think that it's not important for you, it's very important for you to ask your parents, have you put a will and testament in place? Because the probability is, and it's not a nice conversation or a thought to have, but it's, death and taxes are inevitable. So for you to maybe just position this, even to your parents, to ask, do you have a will and testament in place? A big part of your financial future comes from your parents. those that are fortunate enough. I know that that's not the case for everybody. But yeah, it does reduce stress and heartache in the event that, something happens to your family. So I would suggest that this is something that you look into. I don't think that it's something that is spoken about enough. Obviously, it's a little bit more complicated than I've put together for you guys today, but I don't want to spend too much time looking at that. If you guys are interested in talking about that, I'll be happy to answer your questions afterwards as well. Sure. So I think we've spent inordinate amount of time talking about budgets and goals and all that kind of stuff. That's really the crux of financial planning. It's why I'll give you a budgeting tool. If you haven't started with a budget, I think the sooner you start to realize that it's important to live within your means, the quicker you will be able to take a handle of your finances and actually be in control. So basically your budget will always help you keep your eye on the prize. It will force you to map out your goals and save your money and track the progress that you make and make your dreams become a reality. I think the misconception in today's life is that young people just think that if you, and please don't take any offense to this, I'm just putting it as it is. I myself was in that same role and had a harsh meet up with reality that, it's not, your life doesn't increase the more you earn. It certainly does if you plan well and if you have a budget. But I think just the human factor and how we all are wired together is that we live on this instant gratification, persona that's, we are also entitled to the things that we want in life. And I do agree with that to a certain extent, but to a large extent, I think your habits form the most part of who you become in your life. And a budget is not just a financial constraint. It is actually just it's creating good and healthy habits with your finances, which I think most people do not have. There's a massive disconnection to how people react and respond to their money. A lot of people, especially in South Africa, do not come from wealthy backgrounds. And so the very first thing that happens as soon as you, step into just earning a little bit more than maybe what your parents did, or parents do in a lot of cases as well, I do see very, very irresponsible behavior, and not only in your age group, in people way much older. So the sooner you get into that habit of creating a budget, I can assure you that that's probably one of the most single powerful tools that will help you become financially free and independent, because you will escape yourself. And as soon as you escape your desire to please yourself, you will be able to build wealth, and you'll be able to build sustainable expectations on what your financial growth might look like. So yeah, I think it's, there's so much that can enslave you in this day and age. Spending money has become so easy. I mean, I can just look at my watch at the moment, and I can spend money from my watch. I can double tap on my phone and my card is present. I can zip, zap, tweet, whatever. There's every form of payment available, and people standing ready to take my money. So I urge you guys to just be careful and to be conscious of, your financial standing, and to respect the fact that, as you earn and grow, that you have a responsibility to actually just steward your finances accordingly. So we did spend quite a bit of time on that in previous webinars. But yeah, I think you get the gist of it. So the next thing that we deal with is medical aid and gap cover. I think this has become one of the biggest expenses in in your adult life. Those of you who don't pay your own medical aid and gap cover yet won't know what I'm talking about, but it is, there's a love-hate between that debit order that goes off every month. I can assure you that. But the fact is that medical aid or costs of healthcare in South Africa are truly exorbitant. The thing is that we have tremendous doctors, and I respect all of them, and I respect the field that they're in and what they actually do for us. But the healthcare industry per se has become it just has spun out of control with, and it's not to say that it's only doctors, it's the ever increasing amount of technology, it's the ever increasing amount of research that goes into these new technologies, and for that significant funding is required. It has become so important to have a medical aid, and with that as well, on top of that, which it never used to be, is to have a gap cover. So there's so many different reasons for that, and obviously there's so many different companies out there and different products. But the point is I don't think that in today's age that it would become possible for you to go through your professional career taking the significant risk of not having a medical aid and gap cover anymore. Unfortunately, it's just because the state hospitals are overexhausted, and there's just no way for you to have any certainty that if something had to happen to you medically, which the probability of something happening to you that will not incapacitate you, it will actually just keep you from doing your daily job, has become so highly probable, 83% chance. And this is not me being negative, this is just real facts and data that we've been seeing, of actually being under the age of 40 and not being able to do your job and earn your future incomes as a result of direct illness or something that may have happened to you medically. The reason why these medical aids have become so expensive is because of the ever increasing healthcare costs. I recently had a family where the father was diagnosed with cancer and the mother was diagnosed with cancer, and in both cases it cost the family over R1 million. This was a seemingly wealthy family and did not see the need of having this medical aid or gap cover because they felt that the wealth that they had accrued over their lifetime would sufficiently cover any foreseeable events. So just the diagnosis of these terrible diseases, it cost the family R2 million, but then the recovery process of that was up to the same amount. So unfortunately, it has really become a massive concern, and something that I think you guys must not look past. Rather meet up with a financial planner that will take the time to sit down and understand your bespoke need and find you a plan that will work for you. And that's very important. Anyway, that's that. I'm happy to speak to you guys about this afterwards if you have any questions, but we can move along. So the very next thing that we talk about is risk protection. I'm certain that at this particular point where you guys are at, people have probably approached you about risk insurance. Now, in my personal opinion, the only real insurance that you need right now is income protection, and you need it as soon as possible. And the only reason I say that is because your biggest asset right now is your future earnings. And getting insurance on your future income kind of secures that for you. And at your age, being under the age of 30, it's more than affordable. So, I would urge you to look into that. It's not even a difficult process. You'll be able to get the cover quite quickly. It will literally be, you'll need some personal information. It's your full name, your date of birth, your highest qualification, your income. If you're a student, you can still, whatever your pocket money amount is, you can protect that income. But as I said, this is your biggest asset, and the sooner you actually protect that, the better for you. Now, the reason why this is important is because of the way that insurance companies look at you and your insurability. When you are young, and things like cholesterol and diabetes and depression or work-related stress has not, come onto your medical records, you get cover at standard rates. Now, what that means is that you actually get insurance at a much cheaper rate than anybody else. And this has become crucial because with all the other ever-increasing insurances like the medical aid that we just spoke about, this is going to become a part of your lifetime planning and financial security. So genuinely, the sooner you look into getting some income protection, the better for you. Then, of course, there's life cover and there's disability and illness cover. These are both, or all three of them, will be lump sum covers. The previous one that I've mentioned was the income, is very obvious that just provides an income. The life cover, the only reason why you would look into that right now is that if you have any debt, a lot of people do have significant student debt, to not, if something should happen to you now, leave that behind for your parents. Just to make sure, sometimes the banks actually give you credit life insurance on your insurance, which is in most cases way more expensive than just going directly to a company or through a financial planner and getting a life insurance to cover that debt need. Disability and illness, if there are life-changing events like the one that I explained to you previously about this couple that was diagnosed, obviously this is a very tragic event and unfortunately happens more often than not. But in those events, this actually changes those people's lives because it means that they don't have to sell their assets to pay these medical bills. And unfortunately, the health insurance does not pay everything. There's many bills that come outside of what the medical aid actually looks at. Anyway, yeah, I know the conversation around today's stuff is it's not nice to hear or think about, but I think it's important that we talk about these things so that you are aware. So it's not to bring doom and gloom. It's really just to raise awareness and make you guys aware of that there are ways to mitigate these things. And I'm happy to talk to you about it. All right. Then the next step, that's the next question after I put in place a income protection or some sort of risk policy for my clients. The very first thing is we put together a slush fund or an emergency fund. And this is just to create your peace of mind so that you can protect your assets with your own wealth. So the reason why you take the insurance first and then you start saving is because the insurances for at a fraction of what your income is, you can actually cover the full basis of your financial plan or your wealth as you are accumulating it. And the journey to creating your own wealth is to ensure that you are starting to put away some of that so that over a period of time you can start soliciting or enjoying the fruits of compound interest and as your assets grow. But a peace of mind or an emergency fund does not entirely play that role. This is still looking at kind of like building your own insurance, if I may. Because there's some things that insurances don't cover, and these risks are some of the risks that actually put people into serious debt before they know it. So the reason why you would want to look at your peace of mind, this would be for your short-term insurances, and you would want to protect your assets by protecting your vehicle, protecting the property that you have bought. So I mean, you've all definitely seen so many different short-term insurance ads. I think that's probably the most marketing spent in the country. But this is something that I wouldn't advise you to go through by just having a person or a kind of a tele, call to say, I want to insure my vehicle. I think it's very important to have a relationship with somebody that actually wants your best or has your best interest at heart. And because there's so many different variables to these short-term insurance policies, and if you don't have a professional, you're just being sold a policy. To be honest with you, I see it happen too many times, people coming in through our offices with these kinds of queries. And it's really shocking and actually quite unacceptable. The very little amount of ethics that goes into doing these things. So the reason why I'm saying this to you is just to bring this to your attention once again, so that you understand that it is your responsibility in the end of the day to make sure that these things are put together in the right way. And there are unfortunately sharks out there that will sell you policies that you don't need, or just sell you anything so that that they can earn a buck from it. So this is probably one of the places that you need to be very, very careful on how you insure your assets, because life does happen. You can see, I see that now, you see it now, you don't. I see so many of young people as soon as they get out of university, and especially those that have the luxury of stepping out of university and walking into a high-paying salary. That BMW is bought on the same day, and insurance was not purchased, and a week later, there was some unfortunate event on a Friday night. And that asset is no longer there, and they're not an asset at all. Not that a vehicle is ever an asset. Don't let anybody tell you otherwise. But then it becomes a real liability because you are not able to enjoy the benefit of this luxury vehicle that you have purchased, and it happens more than you think. So it's something that you have to just take into consideration. It's nice to have nice things, but nice things can be the pitfall to your and be very detrimental to your future wealth. You do have a whole lifetime ahead of you to build securely and slowly on your assets, or even your liabilities in this instance. But it's very, very important for you to look at that. I think the one thing that people miss out and why it's important to have insurance, and it's very alarming to me to see how many people out there are driving around without insurance. Remember that the liability is not just yours. A crash does not just happen to you, it happens to other people as well. And if it was your responsibility or it was your negligence, and you were put, even if it was an accident, and you drive into someone else, you are liable for their costs. And if you do not have insurance, I can bet you if they do have insurance, the insurance will pay out to them, but they will sue you. They will come after you and they will get their money back. And that means that all your future earnings then comes back to paying someone else's liability or asset off. So yeah, that's, I think, one of the single most important factors that you need to look at. If you are in a position where you cannot protect your asset fully, you can look at third-party fire and theft. So it's, it is a thing. I can see, somebody says, I find it strange that third-party car insurance is not mandatory in South Africa. I completely agree with you, Rufaro. It is definitely something that you need to, it's actually quite scary. The future is uncertain. Enduring a major loss can leave you spiraling into poverty. I think I painted the picture earlier with the vehicle, but there's many other instances that this could be the case. And unfortunately, I've witnessed it myself. It's very, very sad. And for just securing a certain premium in your life, you are ensuring that these things don't happen to you. Sure, insurance companies are very, very far from perfect, and definitely have their interest at heart just as much as you may think that you have yours at heart. But more often than not, and more often than anything else, having your assets insured does keep you from getting into a place or getting into trouble where you're having or owning assets actually get you into a place where they become real liabilities. So yeah, the next thing after all of that is put into place is trying to see if we can put you into 3 to 6 months where your income is into a rainy day fund. I usually just use a unit trust. I set it up for you very, very quickly. It's a very cost effective. It's a very cheap investment. The paperwork is very, very simple, but it puts you in control. I met a guy a few years ago, and having this rainy day fund actually put him in a position where he got more raises. And you don't go tell your bosses that I told you this, but it put him in a place of negotiation. Because he always had 3 to 6 months of his salary in an account that was growing, he always had the upper hand when it came to performance appraisals and revisions of his salary. And he used that to his advantage because he didn't fear the outcome as much. Not extorting his boss, but also just having the audacity, if I may, to actually ask. There's a famous book that says, if you knock and the door shall be opened to you, and ask and you shall receive. I'm a firm believer of that. And sometimes we are so scared to ask because of the circumstances that you are in, that you don't actually have the confidence because people are too scared to even lose what they currently have. So that puts you in control. I definitely think that it puts you into a place where you definitely sleep better at night. So as I said, I put this in a unit trust for you. And the reason why is because in a unit trust, you can choose different funds. This slush fund, a rainy day fund, I typically put into a money market fund. This does not give you the best returns in the world, but that's not the reason why you would be investing into a fund like that. This is truly to protect your wealth, because as soon as we start getting you higher risk investments, this is for if something happens, let's say, for instance, your car breaks down and it's not insured under your motor vehicle insurance, that needs to come out of your own pocket. Typically, most people don't budget or have a expansion on their budget for anything over 3,000 Rand. And typically these kind of expenses are way more than that. And it costs you money to withdraw from your higher risk investments. Now, the reason for that is because of the prices of units and the fact that they are fluctuating, and it's buying and selling of units and shares on a daily basis. So let's just use a hypothetical situation. You invest 50,000 Rand with my company. We choose a well-known investment company, let's say Allan Gray, and we put you into one of the aggressive funds. On the day that you purchase the units, let's say it's R2 per unit. But as the market fluctuates, and on the day that you want to purchase your shares, that share is actually only valued at 50 cents. You can only withdraw what the value of that share is, because that share needs to be sold first. Obviously, the flip side is also to your advantage, because that share price can increase. But I would never want to put you in a position where, because it's an emergency, you are forced to withdraw from your fund on the day that the share price is low, and you actually lose capital, outside of the fact that you're actually spending quite a significant amount of money on this unforeseen event. So I hope that makes sense to you. It also just puts you in a position to be prepared. Life will certainly hand you something that you did not see coming. It's something that will put you, I think every single person in this room has probably been subject to an unforeseen event that you were a victim to, or definitely put you in some sort of financial distress. And that's why it's good to protect your assets. So for up until everything we've spoken about now has not even made you money yet. You've only spent. But I assure you that this strategy is the most foolproof one that you can get, because I think the mistake that people make is that they just go into their financial planning with, I need to invest as quick as possible, and I need to see my money grow. I absolutely agree with you. But the fact is that if you have to look at any of these unforeseen events that I have spoken about, the amount of time and energy that you spent creating that income and creating some sort of investment plan can actually be taken away from you within a second. And that's why you have to spend an inordinate amount of time at your initial stages as soon as possible in protecting those assets. But now we can get to a little bit more of the fun stuff. But I think nobody wants to speak about retirement, because goodness, you guys are so far from retirement. But you know what? It happens quicker than you think. I unfortunately have so many conversations with people that come through my doors that go, man, I'm retiring in 10 years. I have absolutely no funds. What can I do? At which point, I'd love to give them some sort of Harry Potter wand and say, there you go. I don't know somebody comment what Harry Potter says. I think it's ferocious or trashy or something like that, if there's any Harry Potter fans in the room. But I truly want to help them, but I cannot. At this particular point in time, you guys have time on your side. And I think you need to just take a second to make that sink in, because that's the one thing that is so saddening to me, to sit in front of a family that comes to the realization that they would have to work until they fall over. And that's, I don't think that the creator of the universe, and I'm going to be blunt by saying God did not create us to just be on earth to just wake up and pay bills. Experience Levosium. There we go. But I honestly just think that the sooner you start planning, the sooner you'll be in a position where you'll start experiencing your own freedom. So I think there's a little bit of, I think there's such a confusion on how these products work, mainly because I think they're forced down your throats. So I want to just take a second for you guys to understand how they work, so that we can, move past this conversation and, speak about investments and all that kind of stuff, if that's what you came here to see today. But I think it's really, really, really important that you understand how a retirement annuity works and what the next steps is after that, so that conversation becomes the focal point when you sit down with a financial planner like myself and you go, I want to plan for retirement, and you sit there dumbstruck with no kind of education to how these things work, and unfortunately sometimes get taken for a ride. So, knowledge is power in this instance. So I want you to understand the reason why you would take out a retirement annuity is that it is a very tax efficient way for you to make provision towards your retirement. Retirement annuity, the tax efficiency that I'm talking about here relates to the fact that the government subsidizes a portion of you can contribute up to 27.5% of your taxable income towards a retirement annuity, and that actually brings down your tax rate within, if you are contributing towards that retirement annuity on your personal capacity. Obviously, a lot of you might even go into into corporate companies that will give you pension and provident funds. That has a whole different dynamic, but it also, it does provide provision towards your retirement. But I think having a retirement annuity over and above that in your personal capacity is very important. If you understand how it works, it can really, really put you in a position where you can save, and not only save, but use the tax deductible portion of it to save a lot of money. I think as you start earning more, you start realizing the prevalence of the tax man getting his hands into your pocket. I don't think that is the case per se. I think the more savvy you become with tax, the more you start realizing that there are so many loopholes, illegal loopholes. There are so many structures that you can put in place that actually play into your favor by utilizing the laws in which SARS and the revenue services actually operate. So, come to the whole of your lifetime, you've now contributed towards these retirement annuities. Generally, in your case, I would say start at 500 Rand and started with a 10% increase every year. That would put you in a position where as your salary grows every year, you can start contributing towards that. But when you start earning real money, and you can actually utilize your retirement annuity, because at the end of each financial year, you'll sit down with your accountant and he will say, okay, this has been your all your incomes and your expenses. This is your bottom line. I would suggest that we take a big portion of that and just lump it into your retirement annuity. That's something you can do once a year. And you would have either paid that money to SARS or it goes into your retirement annuity. So it really, really just a function that you have to start as soon as possible so that you give your accountant the ability to advise you on something like that. All right, then when you get to a retirement age in South Africa at this point is 55. You can then, well, that is deemed as an early retirement, but it doesn't put any restrictions on what you're allowed to do. You can take a third of cash up to 500,000 Rand that will be tax-free, and you can then, the rest has to go into what they call a living annuity. 2/3, and then you can then do an income for that for the rest of your life. So depending on how much you've saved over your lifetime, you can have a minimum of 2.5% as an income, and then a maximum drawdown of 17.5% as your income. And that's basically how those two structures work. I can see there's some good questions coming through, and we can definitely have a look at them as soon as the webinar is over. There's not many slides left. Yeah, I think this is something that's, is not, I think for you guys to understand why it's important to have this conversation now already is because you know what the cost of education is. Globally, it is one of the most expensive privileges that you can have, and the irony is that education can actually keep you poor. In America, in the States, that's one of the biggest concerns, is that the big education facilities are putting a massive financial burden on these students. And the loan agreements that you go into actually just keep you enslaved and indebted for the rest of your life. So I think making provision for that as soon as you possibly can is definitely a smart thing to do. I understand that it's not always in everybody's budget capability, but starting small and creating a habit, as I spoke to you earlier, within a budgetary item and remaining within those constraints, I think that would give you the position to actually understand or be in a financially free position at some point in your life when these big expenses start creeping in. So one of the risk products that are available at the moment by numerous companies, I think Discovery definitely does the best one, is called the Global Education Protector. It's a risk product that will cover kids' education in full for any life-changing event such as death, disability, or severe illness. You can actually go as far as saying, you want to cover your kids' education on a private level or on a state level. And then go as far as to making provision for that for up to 4 years, completely paid studies at any res in the world, even Harvard University, given that that the beneficiary of this would get into those facilities, obviously. So yeah, a very, very good, affordable product that offers these kinds of benefits. And then obviously there's two investment types. There's unit trust and an endowment. Unit trust I have spoken about. You can just within that unit trust, we can put together a little bit more of a aggressive fund for you because you'll have that full lifetime. The more time you have, the more aggressive you can structure your investment type. But this is an easy and cost-effective way to make provision for education. So I would think that it's very easy to actually. I like to see it as putting it up as envelopes. You can, within one unit trust, you can have your emergency fund, which will be in a money market type fund. We can put in another envelope that would be in a stable kind of fund, which would be exposed to a little bit of property, be a little bit of government bonds and shares and stuff, but the risk will not be too high. It will just be a little bit higher than the money market. And then you can even go as far as choosing aggressive funds if you know that you're going to be saving for over 10 years. And then an endowment, this kind of just protects yourself from yourself because they are generally 5 to 10 year investments. There's only one withdrawal in the full investment term within an endowment. It has nice tax structures because the tax is actually paid within the endowment itself. So once the money gets paid out, it actually pays out in full with no tax implications. So yeah, that's the structures that I would suggest if you are looking to start planning for your kids' futures. Then obviously there's collective investments, and this is the very last point that we go into having the conversation. Your money is just how a collective investment works, is that your money is pulled together with that of other investment and is spread over the whole range of assets within the fund. Your investment in a fund is divided into shares, and the number of shares held represents the proportionate ownership of the fund. and the overall assets and the return of your assets that they will generate. So this is something that we open up as a conversation when all these other things have been put in place and you are now starting to generate. You are now a wealth generator. You're like a machine moving forward. And this is a very exciting place to be, because the sky's the limit. You know, we can look at offshore investments, we can look at local investments, we can really make your money work for you, depending on how your risk appetite is. There is genuinely so many different structures that can create bespoke investment models for you. Buying and selling of shares, buying and selling of currencies, cryptocurrencies, you name it. There's genuinely, the sky's the limit. I think the reason why I put this at the end for you is because these are the things that you guys are spending your time speaking about at Bryce. Now, I'm not putting words into your mouth, but I've been privy to these conversations, and unfortunately, it's not the best place for you to start. Sure, yes, there's many people that get lucky, but it's not the secure thing. It's not the, you know, the point is that this point in your life, you have time. Unless you have some sort of, you know, access to funds that you don't care to lose, it's fine to go into any sort of collective investment scheme where you can start buying and purchasing shares, or taking the amount of risk that you would on arbitrage or anything like that. But, you know, genuinely, just the structure that I've given you guys today, Wandile, I'm not referring to stokvels, no, and that would be something else. That would be for you to actually understand that you would go into a stokvel for a very specific reason. Let's say, for instance, if you are pooling together money with 5 of your mates to start buying property. So that's something very different. The risk there is, however, also very real, because you're dealing friends and money don't mix so well. But it is a good way to get into the property market if you wanted to. So starting a stokvel is definitely something good. Anyway, guys, I've spoken a lot today, and I would like to open up the forum to some questions if you guys are keen. I have given you a barcode here. You're welcome to open up your cameras on your phone. It will, depending on what phone you have, it will open up in your Chrome, or I think it will best open up in Chrome for you. And it will just ask for, I think it was just your full name and your email address. And then it would send you a free budgeting tool from myself to you. Cool. I hope you guys enjoyed it. And yeah, thank you for your time as always. Ciao.
Thank you so much, Rudi. You are certainly no stranger to Golden Key or this platform. And as normal, as usual, the content was absolutely fantastic. You absolutely give life and practicality to financial planning. I'm sure the students will be able to utilize it well in their future planning. There are a few questions, actually 23, and so many wonderful comments in the chat. So I thought if we'd like to go into the Q&A a little bit for the students. There's quite a few, so let me just pick something for you. Nikita Arendse asks, so risk protection allows you to save money in case of emergencies such as losing your job? That's the question from Nikita.
Nikita, yeah, so there are products out there that do mitigate these risks for retrenchment and such. Unfortunately, I don't really foresee them being the best kind of product to go into. Usually very expensive and very, very difficult to get the actual amount claiming out. So I wouldn't suggest that this would be a product that you purchase. I would rather just, if you were looking at spending that kind of money, I would rather just increase your savings into your emergency fund so that you have 3 to 6 months to be able to find a new job.
Absolutely, absolutely. I'm going into another question for you. from Priyanka Sukra that asks, what is a good amount to save each month to build up your wealth over time?
The more the merrier, Priyanka. But yeah, I think I understand where your question is coming from. I think it needs to, what you need to understand is that how to answer that question will be very bespoke to your needs and what you actually want. But, you know, I think starting first and then rather seeing the benefit of how you can compound that investment over time. Obviously, I think it goes without saying, the more you save, the more you will get in return. So there's no real right amount. I can just give you that most investment companies have a minimum of 1,000 Rand a month at this point. Some of them are giving leeway to 500 Rand a month. But in general cases, it's a good place to start at around that amount.
Wonderful, wonderful. So it's tailored to each person, their needs. Thank you, Rudi. Then Palisa Mamiala asks, can you use both the unit trust and the endowment structures, or is it wiser to use one structure?
So again, this is going to be very tailor-made to what you actually want to achieve. So the reason why you would, so the unit trust you could put together purely because that would be your emergency fund. And if you have an endowment structure, that would be very specific to a specific goal. So let's say in the next 5 years, you would want to purchase a property. Then because you can, because that endowment does not allow you to access that money, it just kind of protects you from yourself. So that's the reason why you would go into that structure. And also it does allow for, you know, a little bit of a tax benefit in the sense that your tax is taken care of within the wrapper itself. But most certainly you can have multiple investment structures. You can have retirement annuities. You can have 10 retirement annuities if you want. You can have 5 different unit trusts. You can have 5 different endowments if you like, but just be aware that each one of these investments do cost money. So having a streamlined structure saves you a lot in costs.
Very true. Very true. Marnu now asks, would you rather start with a retirement annuity or a tax-free savings account or both? Currently maxing out my TFSA with 36,000 Rand a year.
That's awesome, Marku. You can be very proud of yourself. The only thing that you need to note about a tax-free saving is that you have a cap of 500,000 Rand in your lifetime. So, you know, I think saving 500,000 Rand and a tax-free saving account is very accessible. And again, this is one of those things, having to protect yourself against yourself. So, you know, once you've had that tax-free saving, that cap is done, you know, then there's no real need to go into that. Unless you know that you have the discipline to save that and put it away for that specific reason, then you could do that. But yeah, starting with a retirement annuity would probably give you a better scope in the sense that the sooner you start, I mean, we've had so many different scenarios of looking at if someone starts at 25 with something like 500 Rand versus somebody that starts at 45 with 5,000 Rand. That the person that started with 500 Rand at 25 versus the person that started with 5,000 at 45 is still in a much better position at retirement because of the glorious effect of compounding.
Kaylee Tennyson asked Rudi, how do I know what is the best thing to do with my savings money? Because I want it to grow rather than it just sits and stay the same in a savings account if I'm not using it.
Was her name Kaylee?
Kaylee Tennyson, yes.
Kaylee, I think it is important. That's why I went through you guys understanding the structure today, understanding that Investing is not always about the return that you can get, because you have to, the more risk you take, the more likely you are to lose and the more likely you are to gain as well. So if you've not put in the structure that I've spoken to you about previously to mitigate these risks, then in your particular case, I would say, have your money in a money market investment, have it liquid for yourself. It will still grow over time. You can expect a growth of 6% from an investment like that. But I think I think the conversation around, what are my investments doing and how much are they growing compared to what is the actual strategy for why I'm investing that amount of money. So for you, because you've already started saving, you're one step closer to actually having your invest or your money market fund put in place where you can move on to the next step and get closer to having a collective investment scheme or starting to purchase shares and stuff like that, where that would be your prime concern. But then you would have the ability to have a larger appetite for risk, sorry.
Fantastic. Thank you for that wonderful advice, Rudi. I have someone anonymous here who asks, which factors should one consider when choosing a retirement annuity?
I think sticking to, it's a difficult question to ask because, again, difficult question to answer because, again, it will be very specific to your circumstance. But if you have to look at these factors, I think the one question that you can ask your financial advisor is, what is the effective annual cost? The costing of these retirement annuities, I think, have been the single most detrimental thing to South African society in general, because of it being a very overpriced investment. But in back in the day, when I think it was just cowboys that could sell retirement products, and there was no real need for any kind of insight. But yeah, I think costing, because it's such a long-term investment, the cost of this investment is very important. So when you're looking at the effective annual cost of an investment like a retirement annuity, anything under 3% is very, very good.
Wonderful. Then there's a question here from Rahul Kapoor, and I think we've all had this question over the last few months. He asked, or she asked, what is your opinion on investing in cryptocurrencies?
I can't believe it took so long before we got this question. You know what? I think there's such an amazing space for it. I think that it's, I can, without a shadow of doubt in my mind, say that it is the future, certainly. So if it is something that you want to dabble in, by all means, go into it. But I'm going to have to say to you that you need to have your ducks in a row. You need to know and understand the intricacies of investing into something that has no real governing body. So the volatility, yet again, is very, very high. So if you're going to go into something like that, I'm sure you've all met somebody that has told you at a braai he just made 5,000 Rand on his crypto today. But I can assure you that they're not telling you the amount of volatility that they've experienced as well, much like gambling. So yeah, it's probably not the same. So that's a little bit of an unfair statement, but certainly something that I would say, if you have some extra money to put into it at this point, and not really play it as actively as I see that most people are trying to do it. It's not like the stock market that you play. It's really just something at this point where you can purchase currency, future currency, that could grow significantly. But yeah, it's definitely not a sure thing, guys. It's very high risk. Don't use your inheritance money. Don't use money that you are not willing to lose. It is definitely, unfortunately, the space is still very unknown, and but it is exciting. I do agree with you. It does excite me, but I think spend some more time in educating yourself on how it actually works.
True. I was thinking as you were speaking, Rudi, it is a gamble. Yes, you're indeed correct. So if they are willing to take the gamble. One last question, Rudi, from Albi Twala in the chat function. Is it advisable to buy a car for personal use under your company name than under your name? Does that come with tax benefits? Also, is it advisable to buy land for property for commercial use and approach the bank for a loan, or rather approach the bank with money to buy the property?
Yeah, I mean, these are very good questions. And again, it will depend on what your overall net worth is. It will depend on if you have any existing properties. So I'm just going to take the question at face value and pretend you don't have any assets and you don't, and you're basically wanting to extend the bank's money to build your own wealth. Now, I think this is how most people have become significantly wealthy. They call it OPM. It's other people's money. So particularly getting rich with the bank's money. If you understand these structures well, you can really do it to a good degree, but it is subject to you having a good a good credit score so that you don't have high interest rates. So to answer the question on whether or not it's good to buy a vehicle within a company structure, the thing about that is definitely that is because of a company car is you will be able to get some sort of tax write-off from that. But there are very strict rules within SARS on, that it must be proven that the vehicle is, a work-related vehicle. It's, there will be a clear distinguish between personal and business use. But if you have a savvy accountant, there's always ways to justify that and put it in place, definitely. So yeah, to answer the question, yes, it is a good way to purchase liabilities.
Thank you, Rudi. As always on your webinars, the questions are just streaming in. That's why I'm going to have to cut it short. They will keep you busy the whole afternoon. I see wonderful chats. I see so many compliments. Students are just applauding you for your presentation and for the insight that you've brought. I also have a lovely comment in the Q&A. It's formatted in a question, but I think it was Danielle. I'm just looking for a comment here. Danielle van Deventer asked, can we recommend a space or a course that can explain more of these terms and concepts? And I have very good news for the Golden Key members attending this session, because there will be sessions to follow. So I want to encourage you to keep an eye on our social media platforms and also on your inbox to register for the event. Rudi from Golden Key Southern Africa, sincerely thank you so much for being with us. You are already part of the GKSA team and family, and also to the GKSA staff online with us. Thank you for all your help and assistance. And with that, Rudi's new webinars to follow will be advertised. So we just thank you for giving us wonderful insights today. Again, thank you for your time and your experience, sharing your knowledge with us. And we look forward to the next sessions. Thank you, everyone.